Donald Trump just released his new tax bill to Congress, and if it passes, it could be one of the biggest tax cuts in U.S. history. From no tax on tips to no tax on overtime pay to the return of 100% bonus depreciation. This bill is loaded with some changes that could put some serious money back in your pocket. So today we're gonna do a full breakdown of Donald Trump's one big, beautiful bill. All that plus more on today's episode. What's up, family? Welcome back to another episode of Tax-Free Living. I'm your host, Carter Cofield, and today we're going to be breaking down Donald Trump's big, beautiful bill so that you can know the good, the bad, and the ugly about this new tax plan, but more importantly, you can know how these changes will affect your taxes. So without further ado, let's break down this bill. So let's start with the foundation. The purpose of Donald Trump releasing this new bill is he seeks to extend or make some of the tax cuts permanent from the TCJA of 2017, which included lower individual tax rates. We saw tax rates for individuals go decrease to 12%, to 22%, and 37%. These were some of the major tax brackets that were changed. The standard deduction was nearly double from $6,200 to $12,000. And in 2025, the standard deduction is actually $15,000. And all of these are set to expire at the end of 2025 unless something was done. So Donald Trump proposed this new tax bill that would extend or make some of these deductions permanent. Basically, lower tax rates plus higher deductions will equal more money back in your pocket, and that's exactly what this new proposed bill is the goal of this new proposed bill. So let's break down some of the major policies in this bill that will affect your taxes the most. Number one, no tax on tips. So Donald Trump promised in this new tax proposal that if you earn qualified tips up to $150,000 or less, you won't have to pay taxes on these tips. So what this means that if you earn $100,000 in tip income, you won't have to pay taxes on that $100,000. And this is going to be major for people working in the gig economy, major for people working in hospitality and restaurants, because majority of their money is earned via tips. And if this bill is passed, that tip income will be tax-free to them. Now, Donald Trump didn't put a lot of information on what qualifies as a qualified tip or a non-qualified tip. So we want to make sure we keep a lookout on that part so we can know which tips count as qualified. Number two, no tax on overtime pay. Now, this is major because usually when you work overtime, you're paid time and a half. And this time and a half income puts you in a higher tax bracket, which means that the taxes you pay on your overtime income is actually more than the taxes that you pay on your everyday income. So if this bill is passed, not only will you not have to pay more taxes on overtime pay, you won't have to pay any taxes. So all that money that is earned from you working harder will be 100% tax-free to you, the employee. And this will also, in my opinion, as an employer, it would entice me to help my employees get more overtime pay because I know that money hits their bottom line. So this is going to be major to anybody who has to work overtime. Now, number three, increase to the HSA contribution limit. So HSA stands for a health saving account. It's one of my favorite accounts because you get a triple tax benefit. You get a tax deduction for the money coming in, the money grows tax-free, and then the money, you can use the money tax-free as long as you use it for health-related expenses. Now, currently, the HSA contribution limit, if you're single, is $4,150, and if you're married, is $8,300. Donald Trump in this new proposed tax plan wants to double the HSA contribution amount, meaning that if you're single, you will be able to contribute $8,600 to a HSA, and if you're married, you'll be able to contribute over $7 $15,000 into this account tax-free. Now, keep in mind that this HSA contribution has an income limit. So if you're single, earning $75,000 or less, you're good. And if you're married, earning $150,000 or less, you're good. Now, it doesn't mean you can't earn more than this. It just means that your AGI needs to be less than these limits if you want to be able to fully maximize your HSAs in 2025 and beyond. Now, number 4 is major for the elderly. So Donald Trump did do a $4,000 increase for the standard deduction for elders. So if you're over, I believe it's 59, I have to double check. But if you're over a certain age, your standard deduction will have an extra $4,000. So that means the standard deduction this year is $15,000. It will be $19,000 if you're over a certain age. Now, number 5, I believe, whatever the next number is major. It is the increase to the child tax credit. Now, the child tax credit was $1,000 per child previous to the 2017 TCJA. Now, and after the TCJA passed, it increased the child tax credit from $1,000 to $2,000, but that was set to expire at the end of 2025. So if this bill is passed, it will make the $2,000 child tax credit permanent, but not just that, it will actually increase the child tax credit from $2,000 to $2,500 until 2028, which could be major for anybody who has kids, especially if you have multiple kids, being able to increase this credit, because remember, a tax credit is a dollar for dollar increase to your tax refund or a dollar for dollar decrease to your tax liability. So this is going to be major to anybody who has children. Now, the next policy in this proposed tax bill is major, and that is no tax on car loan interest up to $10,000. Now, before this bill, the only people that were able to write off their vehicle loan interest was business owners, right? If you had a vehicle that you use 100% for business, the interest on your loan is tax deductible. But what Donald Trump is saying in this new proposed tax bill is that whether you have a business or not, you will be able to get a tax deduction for the vehicle loan interest that you pay if your vehicle is manufactured in the United States. So the goal of this, in my opinion, is to, one, increase spending in the automotive industry and to increase spending in domestically produced automobile industry. So if you were to buy a vehicle, after this bill is passed, you will be able to write off up to $10,000 in qualified vehicle loan interest, which is major. So those were the highlighted policies that I think will affect Americans everywhere. But now let's take a shift and let's discuss the major wins for business owners if this bill is passed. So the two major policies I want to talk about when it comes to business owners is, number 1, the extension of the QBI deduction and the increase of the QBI deduction. So for those of you all that don't know or don't remember, when the TCJA of 2017 was passed, it included this new deduction called the QBI deduction, which basically was a 20% tax deduction for business owners everywhere just for being a business owner. So if you earned $100,000 in profit in your business, you were able to get a $20,000 tax deduction for this QBI deduction. But the problem is this QBI deduction was set to expire at the end of 2025. If this bill is passed, it will make the QBI deduction permanent. Not only will it make it permanent, but it will increase the deduction from 20% to 23%. Meaning, if you're a business owner earning $100,000 in income, you will get a $23,000 tax deduction just for being a business owner. So if this is passed, this will be a major, major, major break for entrepreneurs everywhere, including myself. The next major policy in this proposal that will affect business owners everywhere is the return of 100% bonus depreciation. So Back in 2017, Donald Trump included the 100% bonus depreciation, which meant for equipment, for real estate, and for vehicles that weighed over 6,000 pounds, you can write off 100% of the value of that vehicle. But in recent years, we've seen a decrease in the percentage of this bonus depreciation. It was 100%, then it went down to 80%. Last year it was 60%, and this year it's 40%. But if this bill is passed, it will not only will it make it 100% for this year, but get this, it will retroactively apply for previous years. So what does this mean for you in your tax bill? Well, this means that if, let's say you bought a vehicle last year that weighed over 6,000 pounds, right? And let's say that vehicle cost $100,000. Last year, the bonus depreciation was 60%. So that means you would have got a $60,000 deduction for that vehicle. If this bill is passed, it's saying that that 100% will retroactively apply, meaning you can go back, file an amended tax return, and instead of getting a $60,000 deduction, you will get a $100,000 deduction, which will increase your tax savings by tens of thousands of dollars. So if you bought a vehicle last year, the year before that, you will be able to file an amended return and get that money back that you overpaid the government. And here's the thing, it doesn't just work for vehicles, it also works for real estate. So if you bought a real estate property and did a cost seg study and only got to write off 60% or 80% of your bonus depreciation, you can go back and get that 100%. This part in the bill, this policy in the bill, I think will have the largest impact on entrepreneurs and literally put tens of thousands of dollars back in your pocket. So one of the things that we're doing with our clients is that if this bill is passed, we're already putting them in the process of getting that amended tax return filed. So the bottom line is that this bill included some major changes that will affect gig workers, that will affect people that are earning tips, that will affect the everyday employee with the no tax on overtime and the deduction in interest for vehicles. But this also will have some major implications for business owners everywhere. So overall, I think if this bill is passed, it will lower the tax rate of the lower class, middle class, and obviously the upper class. Now, some major keys and policies that this bill was missing is the no tax on Social Security. No tax on Social Security was a major marketing ploy that Donald Trump used in his campaign. He's like, don't take my word for it. Take a listen.
We're not going to charge tax to Social Security, the seniors. We're not going to do it.
Another thing that was missing in the bill was the reduction in the corporate tax rate, which is still at 21%. So these were some two major things that I think were missing that Donald Trump promised in his campaign. But overall, I do think this tax bill will help most Americans, especially business owners, save on taxes. So do me a favor, let me know in the comments which part of this bill is your favorite, and let me know if you think this bill will be passed, and let me know what you think is missing that Donald Trump promised that he didn't include. I can't wait to see your comments, and please do me a favor, share this video and hit that subscribe button so I can keep you up to date on the latest and greatest with this big, beautiful bill. Can't wait to see you all next time.